Welcome, my dear students, to our course International Banks. Today we will explain chapter number 3, Types of Banks. In the first section, there is a comparison between traditional versus modern banking. So, in this case, the traditional banking business consists of deposits and loans, accepting deposits and the supply of loans. So this is the classical functions for traditional or classical banks. What about the main source of profit for these traditional banks? The net interest margin, or the gap between interest rate on the loans minus interest rate on deposits. In this case, the main driver for traditional banks, profitability. So how can the bank increase the number of branches, expand in the assets? But in case of the modern banks, we talk about new terminology, which is the shareholder value, how the bank can maximize shareholder value. Before 1990s, in this case, we will classify the radical changes or the development in banking before 1990s and after 1990s. So before 1990s, we talk about high regulation levels, high regulation level. All in all, there is a negative relationship between the regulation level and the competition level. So high regulation level leads to lower competition. So before 1990s, we talk about high regulation level, so the competition restricted. Since 1990s, mainly when we talk about 1992 and the European Union integration, we talk about the regulation level decreased, so we talk about increasing in the competition. In this time, since 1992, we talk about universal banking model. Based on this model, the banking business defined as involved all aspects of financial services activity. So the bank provide full services or full financial services. The same trend happened in the USA. In this case, we talk about the development in the Interest State Banking and Branching Efficiency Act in 1994. And another trend happened in Germany. So, all in all, we talk about universal banking activity, and the bank provide full financial services. But what about the reasons to transfer from traditional banks to modern banks? The first reason, deregulation. This word deregulation. What do we mean by deregulation? The deregulation equal when deregulations equal when you decrease the regulation level. When you decrease the regulation level. So deregulation equal decreased in regulation level, so the competition increased. Reason number two, when we talk about privatization. What do we mean by privatization? All in all, in general, privatization transfer the ownership from state to or from the government to private. From government ownership to private ownership. In banks or in the business of banks, we talk about privatization in banks and banks listed in the stock market, and this has increased the competition. Number three, or reason number three, we want to talk about communication and technology. Communication and technology. In this case, communication and technology, we talk about decreasing the transaction costs. And in this case, we talk about how to attract new customers, how to increase competition between banks. Recently, modern banks, not traditional, modern banks offers insurance services. So in this case, we can use this term, bancassurance or all finance. bancassurance or all finance as a French term, French words. The bank provide bancassurance. In this case, the bank provide banking services and related insurance services. Related insurance services like protection, BPI, protection of the loans, and this product, in this case, talk about maybe your loan, you request to the make insurance contract for this loan. Okay, what about the models of this bancassurance models at figure 3.1? Bancassurance models. Number one, conglomerates, and number two, distribution aliens. M&A equal merger and acquisition, may be holding, may be integrated, and insurance subsidiaries. But distribution, we talk about three categories: pure distributors, joint ventures, and agreements. This model, can we talk about some countries like Italy, France, Spain? In this case, we talk about the people visit banks on the regular basis, and maybe the preferable model is conglomerates. So, recently we can note that modern banks as a full service provider for financial services. Some banks like JP Morgan, Barclays, and these Barclays uh, um, try to drop the word bank from the marketing campaign. Why drop this word bank? Because these banks, more than bank, operate as large corporate, not a bank. Table number 3.1, comparison between traditional banks and modern banks for products. When we talk about limited equal only loans and deposits, but unlimited for modern banks, because modern banks can provide the related insurance services, can provide the securitization or the investment bank services. Income sources for traditional banks, we talk about the net interest margin or the interest rate on loans minus interest rate on deposits. But in case of modern, yes, the same net interest but plus commission from and fees another from another services. Competition restricted in case of traditional because high regulation, but the competition high in case of modern because soft or lower regulations. Strategic goals, asset size and growth. In this case, we talk about supply side orientation, but in case of modern, we talk about shareholder value, how to create and maximize the shareholder value, and this is demand orientation. This example for bancassurance in Egypt, Bank Misr provide the bancassurance with the cooperation with Aliens Life Insurance Corporate. In this case, we talk about the bancassurance model in Bank Misr. Retail banking or personal banking, in this case, we talk about financial services offered to clients, and usually we talk about small transaction in nature. Commercial banks. Commercial banks, yes, the main financial intermediary in the economy and the main source for credit to household and business sector. Mainly in case of commercial banks, we talk about the importance of commercial banks at the in implementation of monetary policy. As we explained in the previous points or sections, the central bank setting the rule and the commercial banks perform the rules or apply the rules or the regulations from the central bank. Yes, the commercial banks listed and joint stock corporations and the private owned. Okay, commercial banks, in this case we talk about maybe deal with the corporate clients or individuals in lending and deposits and another services. The largest commercial banks, in this case, we talk about the household names like Citibank, HSBC, Deutsche Bank, and Barclays. In this case, the bank hold the household name or keep or include the household name. The core business for commercial banks, yes, deposits and lending, but largest commercial banks, this is very important. Largest commercial banks engage in the investment banking, insurance or related services. Yes, commercial banks play a significant role in economic development with the process of the monetary policy in trade, in commerce. What about the services provided by commercial banks? Number one, collection of deposits in case of accepting deposits from the customers. Facilitate the payments with the methods or different methods like checks. Provide loans and advances and facilities, overdraft. Provide credit information. In this case, we talk about the credibility for the businessman and the credibility for clients. Discounting of bills. So in this case, we talk about create the or increase the liquidity. Collection of checks, safety and valuables. In this case, with lockers, you can keep your gold, your wealth in this case. Remittance of money. In this case, we talk about 20-hour services for this bank. What about top 10 commercial banks in the world based on the year 2020? This table, okay. Based on Tier 1 capital. Tier 1 capital, this is the an index or ratio to evaluate how the bank can face financial distress. How the bank can face financial distress. We can use other words that financial health for the bank. Okay, back to our table. This is top commercial banks. Bank number one and number two. Bank number one and number two and number three and number four, Chinese banks. So we know that top four banks out of top 10 made in China. So the first bank, industrial and commercial bank of China. From JP Morgan, bank number 5 to bank number 8, Citigroup, made in USA. Bank number 9, HSBC, UK, and the last number 10, Mitsubishi Financial Group, made in Japan. So in this case, we talk about the top 10 banks in the world based on Tier Capital 1 ratio. The Tier 1 capital ratio introduced after the economic crisis in the year 2010. So the economic crisis started with the end of the year 2008. Okay. Based on this ratio measure the bank's ability to resist the financial distress. Based on Basel III. What do you mean by Basel? Basel International Committee regulate and manage the banking services or the banking business in the world. Based on Basel Edition 3, the Tier 1 capital should be at least 4.5. In this case, talk about the equity component. Equity component of Tier 1 capital should be at least 4.5 of risk-weighted asset. What do you mean by risk-weighted asset? Risk-weighted assets, we assess the assets before risk and after risk. Before risk, this is the nominal value. After risk, this is after weighted or risk-weighted asset. So The core capital equals shareholder equity, retained earnings as you learned in the accounting rules. Tier 1 capital adjusts the core capital with risk. Core capital with risk. But remember that cash on hand, no risk, so the weight equals zero. Weight of risk equals zero. Mortgage loan may be the risk 30%, 50%, or more. This is Tier 1 capital, commonly known as bank's core capital. What about Tier 2 capital? Tier 2 capital, more risky than the Tier 1 capital because the component of Tier 2 capital, we talk about revaluation, we talk about undisclosed services, we talk about hybrid securities, subordinate debt. So, all in all, the Tier 2 capital risky than the Tier 1 capital. What about our regulation or our rule? Tier 1 capital, to calculate the Tier 1 capital ratio, equal core capital divided risk-weighted assets. Core capital divided risk-weighted assets. So this is example or problem number 3.1. Suppose ICBC Bank holds 8 millions in core capital. Okay, this is the core capital, maybe the share value, shares, retained earnings, and so on, and lends out 20 millions to BMW. Lends out, so this is the loan, 20 million. 20 million, this is the nominal value or the asset before risk. Outstanding loan comes with the risk weighting of 80%. This is the risk weight 80%. Calculate the Tier 1 capital. Okay. Risk weighted asset equal the nominal value 20 millions times 80% equals 60%. So we will compare between loan before asset equal loan before risk equal 20, loan after risk equal 16, so the gap equal 4. This is the value of risk. Tier 1 capital ratio equal core capital at 8 million divided risk weighted asset 16 millions equal 50%. This percent good or bad? We need a benchmark. What about the benchmark? Basel III. Remember that. Basel, International Committee, which regulate and organize the banking services around the world. So, based on Basel III, the minimum Tier 1 capital, 6%. This is the minimum. So, in our example, 50%. This is good and very good. Problem 3.2, the same but different givens. Saving banks. Saving banks in this case similar to commercial banks in many features, but what about the differences? The differences related to ownership. So maybe saving banks, mutual ownership, and maybe owned by the shareholders who are the account holders or borrowers. So maybe the ownership public, like Egypt. In this model, saving banks available in Egypt in the Egypt Post. Egypt Post, this is the model for saving bank. Okay, this is the main feature. Number two, what about the globally? Globally, when we talk about USA, Saving and Loans Association, S&L, Saving and Loan Association or draft. In this case, we talk about the financing of household deposits and lend retail mortgage. But the main feature for saving banks provide microcredit, small credit, and small facilities. So the saving banks target middle and lower income groups, middle and lower income groups. In USA, the saving and loans listed. What do you mean by listed? Shares in stock market. Shares and in stock market. What about Europe? In the Europe, the popular case, we talk about Sparkson. Sparkson, this is the popular model in Germany. and this is owned by federal or local governments. Sparkson set up over 200 years, as we will explain in this the next case study. The same for UK. So, as we explained that the main goal for these saving banks, how to encourage SMEs, how to encourage small and medium enterprises. So this is case study for German saving banks, Sparkson, which set up in Germany over 200 years. Set up in Germany over 200 years. Cooperative banks, this type many similar in many features like saving banks, and we talk about mutual ownership and the conduct retail and small banking services. So the main feature for this model, small banking services, small banking services. It plays a significant role in many Europe countries like Germany, like Netherlands, like Italy, Austria, and Spain, and Asian countries like India. Okay, the cooperative banks provide financial assistance. This is the main topic. Financial assistance at lowest rate of interest. Lowest rate of interest. The main feature for this cooperative banks, okay, how to achieve the development goals. How to achieve development goals. But recently, large numbers of small cooperative banks consolidate together to create large institutions like Rabobank in Netherlands and Crédit Agricole in France. The same in UK, cooperative banks since the year 2007, 2009, consolidation, okay? In this case, we talk about the diversity of banks. This last top 10 cooperative banks of India, we talk about the examples for the cooperative banks in India. Building societies, this is a mutual institution, yes, and adapt the cooperative principle. Each member, one vote. One member, one vote, regardless the amount of money shared or invested. One member, one vote. Okay. What about the management for building society? Building society managed by board of director. Board of directors. So in this case, we talk about separation between the management and the ownership. What about the difference between building societies and banks? Banks, corporation, and normally listed in the stock market, but societies not driven by this pressure, not driven by external shareholder pressure to maximize profits. Abnormally, we talk about the societies run with the lower costs and offer cheap mortgage loans with the lower interests. What about the regulations or the barriers? The building society is subject to hard regulations compared with commercial banks. So, for example, it's illegal for building society to increase the fund more than 50%. Example for this nationwide in UK, as an example for national society in UK, credit union. This is a mutual deposit institution, and this is non-profit cooperative institution. Non-profit cooperative institution owned by members. Owned by members. So in this case, the members are the owners and the clients. The what about the works and the staff in this credit union? Credit union, many staff works at the part time to decrease the costs. Examples for credit unions in USA: Navy Federal Credit Union, We talk about assets with the value 147.9 billion of dollars. What about some data about this credit union? Around 86,055 credit unions from 118 countries. We talk about savings and shares, 2.1 trillions of dollars, loans, 1.8 trillion of dollars, assets, 2.6 trillions, and reserves, 226.7 billions of dollars. Private banking. Private banking equal. The bank provide high quality services, customized services with high price and target specific clients. Private banking, the bank provide high quality services, customized service based on the client needs, high price, yes, and target specific clients. The good examples for private banking when we talk about Bank of America, Morgan Stanley, and HSBC and JP Morgan. What about the segmentation? Segmentation based on HNWIS, high net worth individuals. High net worth individuals. So the largest private bank in the world, Raymond James Bank. Raymond James Bank, this is the top private bank in the world. What about this pyramid? This pyramid, the pyramid of high net worth individuals. What about the base? The base, if you have a deposit with 100,000 of dollars to less than 1 million, you are in this base mass affluent. If your deposit from 1 million to less than 5, in this case you millionaires next door. If your deposits from 5 millions to less than 30 millions, you are in mid-tier millionaires. And if your deposits 30 millions or more, you are on the top of this pyramid, ultra high net worth income. Ultra high net worth income. What about the profile of private banking? As we explained, that customization of services based on the expectation of client needs, long-term relationship, and personal contact and discretion. Corporate banking or institutional banking, the same. We talk about how the bank can provide services for business, but selective business, selective cooperation. Mainly, we talk about the large business. Institutional banking or the corporate banking may be operate as a separated entity or under umbrella of the investment bank. Okay, but this is very important that investment banking, private banking, or cooperative banking or institutional adapt loss leader strategy. Loss leader strategy. What do you mean by loss leader strategy? Loss leader strategy as pricing strategy, okay, mean that the bank provides services below the cost. The bank provides specific service below the cost. Provide the service with price below the cost. Why? Maybe to attract new clients, maybe to encourage related services to cover this loss. Based on HSBC services, we can talk about the services provided for business or for corporation into three categories. Business banking, when the services provide for business with turnover up to 2 million of England pound. This is business banking based on HSBC. Commercial banks, when the services provided for business or for corporation with turnover from 2 to 30 millions. The corporate banking, with the business or services provided for business with turnover greater than 30 million. This is based on HSBC classification. All in all, We talk about the services provided for business. We can classify it based on the size into small business services. In this case, we talk about payment services, debt, middle and large business. In this case, we talk about cash management, transaction services, and foreign exchange. Investment banking. Investment banking, this is very important to distinguish between the investment banking and commercial banking. In case of investment banking, okay, the investment bank, no relationship with retail client. Investment bank, no relationship with the retail client. Investment bank, no deposits, no loans. Investment bank only work with securities, only issuance of stocks, issuance of bonds, advisory services in merger and acquisition. Okay, so this is the main difference between the commercial bank and investment bank. In general, banks like CIP known as the commercial bank, JP Morgan known as investment bank, because the core capital for JP Morgan securities underwriting. The in this case maybe large commercial banks expanded in investment banking and provide commercial and investment banking. This case study JP Morgan as example for investment bank. Okay, this is the American investment bank with clients equal 200,000. Islamic banking. Islamic banking, in this case, we talk about new terminologies used in the business language. Yes, we talk about Islamic Sharia rules. We talk about the profit sharing. Profit sharing. We talk about return instead of the interest. So the the main aim for Islamic banking to encourage entrepreneurial activity. Okay, and innovate products based on the profit sharing. Profit sharing, in this case, the depositors share the risk of bank lending. So depositors earn a return, not interest. What about the global level? Globally, there are around 100 Islamic banks. Okay, only 3 countries operate the banking sector with full Islamic banking. We talk about Pakistan, Iran, and Sudan. Internationally, international banks like HSBC provide Islamic mortgage to its UK clients. The same with Lloyds TSB introduced similar products in the year 2005. What about the largest Islamic banks for the year 2021? Al Rajhi Bank as Saudi Arabian Bank, Al Rajhi Banks. Okay, Rajhi banks provide or reported as the first or the largest Islamic bank in the world with the assets around 125 billions in the year 2020. Electronic banking, in this case, we talk about the innovation, financial innovations, how to decrease the transaction costs, how you expand in products. So the main categories e-money, electronic money, and remote payment. In case of e-money, in this case, we talk about credit cards, reloadable electronic money. But in case of remote payment, how the customers or clients can access to the account. Okay, what about the overall involvement of remote banking? Number one may be traditional remote banking with ATM, automated teller machines, and telephone banking. This is traditional form. Another form of remote when we talk about virtual banking, that banks without branches. In this case, banks without branches. So this is virtual form of the remote. Another case when we talk about mobile banking equal transfer of money between the smartphones from SIM card to another, and this type of remote banking subject to regulations from the central bank. In this case, what about the mapping of e-commerce? E-commerce consists of e-money and e-finance. E-finance include the other financial service and e-banking. This is our target. E-banking include internet banking, telephone, and the other electronic delivery channels. Case study for Chapter 3, the list of exporters for financial services. This is the list top exporters of financial services. Number one, USA, United States of America. What about the value of exports? 144 billions of dollars. 144.3 billions of dollars. Number two, UK. Number three, Luxembourg. Number four, Singapore. Number five, Germany. And when we talk about the rank for Egypt as an exporter for financial services, Egypt number 53 with value 164 millions of dollars. Thank you, my dear students, and thank you.